Live from the floor of the NYSE, that's a market open.
Hello, how are you today? I hope you had a nice weekend, a nice trading week last week. So this is the 17th week in this project. We're trading the Emini S&P 500 futures market. This futures market is one of the largest, if not the largest and most liquid, volatile futures market there is. It's perfect for day trading because we can trade short distances, 1, 2, 3 points, and because of the high leverage of this market, we can make a lot of profits on a daily basis. So what we normally aim for here on this YouTube channel, as you can see, this is purely demo trading at the moment, just to show you what's possible, give you a bit of an educational experience as well. So the futures market is ideal for day trading because of the low margin requirements to trade. So you can make, I would say, $2,000-3,000, which is around 10%, 5 to 10% per month on this account, which is $30,000 roughly. That's already a good monthly income, an extra income which you can generate. Normally with a $30,000 account in the stock market or any other asset class, it's very difficult to make so much money, like 8% per month. It's very difficult to achieve in any kind of stock or index even. So the futures market lends itself perfectly to trading, day trading. So this is what we do. We trade here on the 5-minute chart. We have 2 indicators that we use on a daily basis just to define our target areas. And also volume is very, very useful because the volume can tell us if this trade can run positive for a bit more or we should exit these trades. Because the more volume we have, the more volatility we have, the better is our opportunity to get into the market, catch a trend and generate some profits. This is a positive week. I'm not 100% sure how positive this will be, but I assume roughly $650. So what we do, we draw trend lines. I kept it simple. I trade something else in between in my real account, but it is very similar. The approach is almost exactly the same for this strategy. So we try to anticipate a breakout or an area of volume, which is normally the breakout area. And we define this breakout area here. You can see the blue line is defined for the pre-opening session. So anything that happens before 9:30 is the pre-opening session from market close of yesterday. We take the high and the low of this session and then we draw our blue trend line here just to tell you this, because you will see this over and over again. So we have certain approaches to trading these breakout levels. What we like to achieve is to get into the market before we hit this level, so we can trade the continuation if it happens. You can see in this case we did not make our profit target. The profit target should have been 3 times the ATR. And ATR was 0.85. So we times this by 3, which would give us around 2.5 points. We made only 2.25 points here. That's why I wanted to enter a long position from 43.75. but I did not get filled because we just opened on 43.75. So there are many orders placed in the market at these levels, and for a retail trader such as ourselves, it's very difficult to get filled if we just hit the price once. But still, the overall trend direction is still positive, and we should be trading long at any point from here, just to still target our 3 times the ATR profit level, which would be in this case roughly 46.50. Now if we see more volume coming back into the market and we break back into the range and close within the range, we would normally reverse our position. So this is what happens here. We see more volume coming in and we close in range. So a short position could be initiated from here. Very simple and straightforward. Let's see if that actually works or not. So if we break out of the range again and we close above the blue trend line, we have to see more volume again, and then we reverse one more time. But I think we should be doing this only 1 or 2 times per day, not too often. So our first profit target was already hit, which is 42.75. That's why we pull our stop to break even. And we got stopped out of this break even. We have around 50% break even trades, but never mind, this is just part of the equation, because I normally exit trades once we run positive for a little bit, because the likelihood of it reversing is very great, as you can see here. So if we have a break-even trade, we normally wait 1 trade and then we can initiate another position. So a short trade would actually be okay, I think, at this point. Anyway, we did not take any more trades. This is the 19th of September 2016. If I'm not mistaken, this should be a Monday. Let me just double check, because sometimes we miss a day, but we trade normally every day in the background. Alright, because it's a pre-recorded video, we can skip through these, and I will be talking more about our strategy here along the way. I hope you're still with me and this is not too technical at this point. Everyone should be able to understand. I'm only trading these Emini contracts here because this is the most prestigious market for day traders. If you can trade this market here, you can trade any other market. No need to focus on so many at the same time, especially when you're starting off your trading business. You should be focusing on one market and one strategy, just to be able to review your strategy from time to time or every week, so you can see what trading mistakes you made, where you can improve. And if you do this for 10 different markets, this task is definitely overwhelming. So focus on one first, optimize your strategy, and then you can execute the same thing in other markets without thinking about it. Because as soon as you start thinking about what you're doing, your reaction time will be very slow, and you might not take a few trades here and there, which are very, it might happen that these are the trades you miss, and they will give you the profit you need at the end of the month to trade a positive account. It's very important. Once you have a signal, execute. So I generate my signals personally. Let me fast forward so we can see another trade. So this is the 20th, a Tuesday. A long position here from the open. The market opens, by the way, at 9:30 US Eastern. You can see a lot of volume coming in. And the volume indicator is just below the chart. 40,000 roughly in volume. So I have a list of strategies and guidelines which I follow to find my intraday entry points. But even though I take trades intraday within the range, I always want to anticipate a breakout out of the range, because this is where the market picks up momentum and more volume comes in. So the continuation could be very profitable. If we are already in a positive trade, we should definitely let this run for more profit. So for example, here we actually saw a reversal out of range and then volume pushing into range right from the open, doji on the open. A doji is where the open and close of a bar are the same at the same price, so there is no body of the candle. So here, for example, we can observe that the market is pushing positive and we should be looking for an entry point for the breakout. I'm just saying this because I don't know what happens. I can't recall what happens on that day. We still did not break out of this range, but it's a perfect opportunity to enter somewhere here on this retracement for the breakout. It might that the market reverses all the way back down, pushing through this blue trend line, but we will see. Anyway, a retracement always gives us a small edge on the market because the price in the retracement is superior compared to entering the market on the blue trend line. So now we approach the trend line a second time, and this is what we want to see. We want to see a breakout now out of this range and an entry on the retracement, or on the green bar even approaching this level. You can see more volume coming in, more momentum. Momentum means volatility, so the price is pushing around quite significantly. So if you would not have entered on this retracement, we would already now be in a difficult position, because we had a small profit target, 1.25 points, and now the market seems to be reversing back into range. So what do we do in this case? It's very difficult to decide, and you will be immediately caught in a bad trade. But if you would have entered on the retracement 41, we could pull our stop to break even, and then we would be taken out of this break even in the worst case scenario. That's why I always want to anticipate a trade breakout, because we have to generate superior entry levels, otherwise it's very, very difficult to be trading profitable. So you can see here a reversal back into range. So because we did not see more volume pushing back into the range, therefore we still anticipate a positive momentum in this market. However, now we see more volume on this last red bar, therefore we should be entering short. That's why I'm using these indicators, only two, volume and ATR. I think they can be very, very useful if applied in the right way. ATR will give us the profit targets, and the volume will help us to determine whether we have momentum towards one trend direction, even momentum on one bar, which shows a different color to the trend direction. So an upward momentum, we see a red bar, with more volume could also indicate that we would like to push further up, see a continuation. Volume is always good for us because volume will create trends. So we are again in a positive trade. We have many positive trades right from the beginning. It's very, very good because we don't have so much risk, but therefore we also generate a lot of break-even trades. Again, my stop, buy, sell limit. Not sell limit here, stop limit. That means if we hit the price, 36.75, I only want to be filled on my stop on this price. It just prevents that slippage of one tick, for example, for a stop order. Normally stop orders are market orders, but the limit orders for stop are also just fine because this market is so liquid, we can be filled on almost every price immediately. Here we did not get filled on 37.50 because we hit the price just once. So these are the limit orders. This is not a stop order. Maybe I should work with stop orders for our entries in the future. But then we will have some slippage. But I missed a few trades last week, this week also, and the week prior to that. Probably I will miss around 2 to 3 trades per week, which run positive, only because I did not use market orders. But I will find a way to fine-tune that as well. It's all about fine-tuning. If you can make it as precise as possible, even if you make only 1 or 2% extra per month, you're already really, really positive. And it's so easy to make 1%. It's just 1 point. 1 point is around 1%. Green line is our target area, by the way. So these are just a few intraday trades. Target area again is the green line, 36. So I pull my stop to break even. This is a very much a sideways market here on this Tuesday. And sideways market means no volume, or not necessarily volume, but the bars are really moving in one range, and it's a 10 points range. It's not much, 35 to 45, or even less, 42. And it seems to be moving up and down in this range. Very difficult to trade and find a breakout and a trend. But still I have to try. I don't know what will happen tomorrow, any day. That's the thing. I have to keep trying. But normally if we see slow days like this one, we could assume that the days to come will also be rather slow. So we could also eliminate some of our entries, especially moving towards the end of the session. Now we are almost 2.5 hours into the session, or 3 hours almost, and volume is generally decreasing once we move forward in a session. So we want to stop trading at one point in time. I set my limit, and I will do that in the live trading room, which we will set up in the very near future. I will also set that to 1.5 to 2 hours maximum. If we hit our daily target, then we will stop trading immediately, just to eliminate risk, and we can take our profits away. Every day is the same. It's not that we can make all the profits in one day. For me, every day is the same. Tomorrow might be the same opportunity than it is today. And if we can take away $1,200 roughly in one day, which is 4% of the total account, it's more than enough. We just need 2 of those days per month to hit our profit target, which is roughly 8 to 10%, 5 to 10% per month, or at least trade positive every month if that's achievable. But we want to be trading positive, and 5 to 10% is very realistic. You need only 2 to 3 positive trading days per month to achieve that destination. So now again we are a bit more advanced in this session and we see a lot of volume coming in. A short entry is not a bad position here because we want to break through this level, the green level. But still we are in the range, so we have to be careful. And the entry point here at 35 is too inferior because we are just fumbling around this breakout level. If we enter here, we might really stumble upon a losing trade, because this seems to be an area of demand. Therefore, we have to be rather careful. So it's a small retracement here for a short position. That's what I'm saying. We have less volume and a bit of a retracement back into the range. Could be a good entry point. And again, we are in a positive trade right from the beginning. I would like to try actually to take profits at 187.50, just 3 ticks. I could try that. Maybe we really will improve trading results. But this fine-tuning comes later. You cannot do it. You cannot change your strategy every day. It's just something I have to observe for a long period of time, maybe 6 months, and then I can make adjustments to this. Because taking profits early, at least 50% of our trades run positive right from the beginning. So these trades could be already yielding a lot of profits. And then I would say another 25% of trades run positive at least for a few ticks, even after a negative start. So if we trade 75%, 70% positive, even for 3-4 ticks, that could be already a very lucrative strategy. Again, 315 positive, and we hit our target, 34. This is just an intermediate target because the breakout could continue from here. But what I was saying, we have a superior entry and another break-even trade. A superior entry, if we would not have had such an entry at 35.50, we would immediately be in a negative trade here from 34s. If we would have tried to enter at 34s, very, very difficult to recover from this trade. Okay. So now I'm looking rather in long positions because this level seems to be holding, but I did not get filled. All right. Anyway, let's move forward. Okay, let me just check. This is the 22nd. This is already Thursday. What happened on Wednesday? Did we miss Wednesday? Yeah, it seems we missed Wednesday here on this. Okay, we are just about to open the trend line. The blue line is the breakout level 68. So let's see what will happen. Well, the 68 is not really the trend line yet, but the close of this bar, or the high of this bar, which is just forming, should be the range, because this is the highest bar of this session. So a good entry, anticipating a breakout. Again, profit target is hit. And 69.50 is an intermediate profit target. But since I was trading very negative in the first few days of this approach, I wanted to take this trade here. At least a few ticks profit, $670 profit. I just wanted to recover some of the losses, but it's an intermediate level here, because we can see much more momentum to the upside, a lot of volume coming in, almost 70,000, and we break through the high of this S&P 500. We are record highs at the moment. 2,170 is absolutely amazing. And once we break through these levels, we can see a lot of momentum again to the upside, especially if we see that right from the open, right from the beginning of this session, like here. We could trade all of this long until the green line, 75s, giving us more than 5 points profit target. But that's what I'm trying here. 69 entry. Let's see. But I did not get filled. Oh, actually I did. What happened to this trade? Did I exit this trade? I believe I exited this trade, and I know why. I had to go somewhere. Or it's a break-even trade. Let's see. Oh no. Oh yeah, it's a break-even trade. Very unfortunate. No, it's not a break-even trade. It's a positive trade. Good. Very nice. 71 profit target. Again, intermediate profit target. So I closed at 70, 75. Was very nice. But we should have waited, you know, if we really want to take the great opportunity on this day, we should have waited for a larger profit target. I'm not sure if the market hit that level of 75, but check on your own charts if you will. It was a good opportunity there. 5.6 points at least. We could have achieved 5%, 6% only on that day. So that's the trades we have to make. Here, very nice approach again to the trend line. Same thing. This is already Friday, the last day of this week. But we reversed immediately off of this level, so a good opportunity for a long trade. However, we should be considering a short position here as well, because approaching this breakout level and then reversing back into range doesn't mean that we want to push up. It's rather a retracement, so we still should be looking for opportunities for short trades. I wouldn't be surprised if this market would reverse at one point, but let's see. Not sure. You can see actually here this breakout again. And I didn't take it. These are the things we should do. This means stringent execution and following our strategies 100% of the time. You can see I'm even drawing the target area of 60.50, 2160.50, but I'm not in this trade. If you would have achieved the 60.50s, this would have been a very, very good week. But doesn't have to be. Let's see what will happen on this day. We should still be in a short position from 65s normally, as I was saying before. But never mind. This is just part of it. And because we are moving towards the middle of the session, the volume is decreasing. I don't want to take a risk now anymore to go in at 63. My entry was way too late, and you can see we are reversing back up. So if we would have entered 63 in anticipation to get to 60.50, we are in a very bad trade right now, and this is not what we want to be in at this point. So that's why I don't trade once the volume decreases, and I only take positions when I'm really in a superior spot and I have the small edge, the chance of making more profits than losses from that level. Like 65 would have been a very, very good entry. But still the market can reverse back up, as you can. Very, very bad market here on this day. Sideways, a lot of noise, moving up and down. No trend to be seen. Let me see if this market here that pushes to 65. So we would have been stopped out of this break even anyway. I don't know why this session is still very long. I will just fast forward through this session. I think that's it. Because it's Friday, I will not be taking any more trades on this Friday, I think. Well, you can see really sideways. And we have certain levels, 65, 62 seem to be demand and supply areas, resistance areas and support and resistance. So the market is pushing up and down within this range. I normally don't trade these kind of levels, but it's also a very good strategy. If such levels are approached several times, you could actually trade off of these as well. But this is not what I do personally, but there is a very, very good strategy to do this. Similar approach, superior entries, or you can enter right on the spot here on 61.75, for example. Nevertheless, we hit our here profit target. I was still in anticipation of that profit target, but it's okay. So this was Friday. Let me see if we can see the trade performance here for the last week or for the last month. Let's see. This should be the last month. So $3,251 positive, which is almost 11% of total account value. So you can observe here 33,655 in cash value is not accurate, the account data. I'm not sure why that happens, but I was told that this is somehow related to the data feed from my brokerage account. Seems to be a rather strange discrepancy here between those two values, but the total net profit here should be accurate. So 3,251 is roughly accurate. If you observe some of the previous videos and also this one, you could see that break-even trades seem to also generate a small loss, which is a bit strange, and I have to look into this as well, because we not only pay commission, but we lose almost $18 per trade on a break-even trade, which is a bit surprising and is eating up of some of our profits as well, because we do at least 50% of break-even trades. That would be 50 trades here in this 1 month. So we have a total number of trades 109. So you can see these values here, percent profitable. These are not accurate because our losing trades are also our break-even trades. So 80 losing trades. So I would say at least half of those are break-even trades, if not more. I would say even a bit more than that, because 40 losing trades, 28 winning trades would not yield positive results. So let's say 50 break-even trades, or a bit more, even 60 probably. 60 break-even trades times 18 or $20 is almost $1,000. I'm not sure if that is calculated accurately here, and the net profit is even taking that into consideration. Because if on each break-even trade, if we lose another $18 because of this discrepancy, which I don't know where that comes from, we would already be another $1,000 positive on this account. But since we trade demo, it seems to be rather mixed up everything. I might shift in the future to a real account here, showing you my account. But because I trade different lot sizes and I'm paying out of this account from time to time, it might be confusing and also revealing personal data, which is not necessary, because we try to make this the same stringent execution, same approach, same strategies, and same trades. All right, thank you for watching. And I hope you enjoy your trading week and see you here soon. Take care. Have a nice day. Bye bye.